This is a review of my long trade on the SP 500 4-hour chart taken from last week. The reason why I want to review this trade is because I believe there was a second opportunity to re-enter the trade, but I did not see it at the time. From last week's analysis video, I mentioned that there was an opportunity for me to take an intraday long if price does pull back to this level. So in that video, I mentioned I was looking for a pullback onto this level here in order to enter long. And that turned out to be the case. It did happen. So I've entered on the trade. This is what it looked like at the time I was entering the trade. So I'll bring you the screenshot. Here's the trade that I took. So we had a nice pullback. We have an indecision candle sitting right on top of the zone that I was looking for. So to me, this was a standard reversal trade. I put in my entry. My stop loss was at 2909.9. You call that 2910. And unfortunately for me, as you can see how it turned out, I got stopped out by just 1 pip before price continued to push upward. And in fact, from yesterday's market open, it did actually gap up. So let's review this trade, specifically looking at price action after I was stopped out to see if there was an opportunity to re-enter the trade or not, because I believe there was. So this was the candle that I was stopped out on. We're going to be looking at all of the candles following that, but before this breakout happened. So anything in this squared here. We've got 1, 2, 3 bullish candle, but I don't think that's convincing enough for me to have re-entered the trade. What it does, however, is that it does tells me that this level that I have identified, which could be acting as short-term support, was in fact holding as support. So those 3 candles would have still made that argument valid. Then we have this candle, this, and this. I think at the point of this candle here, it is reasonable to say that this could have been a second opportunity to enter long. It would have been very risky, I believe so, because this candle barely cleared out the high made previously. So at this stage, it would be a highly risky trade, and I don't think I would have been able to find a reasonable stop. If I was trading this, I think the stop must be below the swing low. So it has to be there. It would not make sense to put it any way higher than that. Now, taking all of that away and having a look and taking a step back, looking at what it did. So we had a support zone temporarily at that time, and we have price gradually squeezing up. This is why I want to review this trade, because this pattern I have seen numerous times before. And I believe that if it forms on top of a support zone, even though it's a temporary zone, there is a high chance that you could take a high reward to risk trade. And the way to do it is to draw in this channel. You don't have to be super good at drawing channel, just approximately will do. And you look for a break on that channel, then to enter on a pullback. So what I'm proposing that I should do in the future, if I see something like this, is to watch this channel and to wait for a strong break above that, meaning that we've got a channel that's squeezing. This candle here breaks that pattern. It doesn't break the top of the channel, but it does break the bottom of the channel, and that is a break. And the candle itself is a very strong bullish candle. So this could work as a signal candle. Once the signal is confirmed, then an entry, a more conservative entry, could be taken at the close of the candle. So we're talking an entry here, a stop just below the low of the candle, or more aggressively, if I wanted to load on more risk, I could have waited for a pullback. But currently I don't have any plans on how far of a pullback I want to be getting in. So let's just say this was the signal candle. I got in right at the open of the next candle, stops down here, and let's see how far the target actually went. So this is right on Friday, and I believe the G20 summit were happening over the weekend as well, so it was a high risk trade. However, the high reward could potentially mitigate some of the risks. So we're going back on the daily chart. This trade would still be running, and I believe that if this resistance level now turns into support, it could actually push price up a lot higher, which is why I want to review this trade. Reviewing trade is something that I do actively on a weekly basis, and that's how I learn. I looked at what happened, and I try to look purely from a price action perspective to see if there was any pattern that I have seen previously that I did not see at the time of the trade. It might be easy to say that if you have a cheat sheet of all the patterns printed out in front of you, or if you have it readily available on your computer, you can always look forth and back and just find them as they form. In reality, it's a lot harder than that. And especially after taking loss as well, I wasn't focused. I was still tracking to see how price was doing, mainly on the daily chart, but I wasn't actively looking, and because I wasn't actively looking, I did not see that pattern. Hence today's review video. Before I go, I just want to say that I won't be trading for the rest of July. I do have a Forex project that needs to be completed by end of this month, and for many of you, you would know what that is. So that case study is going to be finished and the videos will be released, and I will hold a webinar for that. That's my commitment towards the community of traders that I learn to trade from. That's it for me from this video. Hope you have a good trading week, and I will see you in a couple of weeks. Bye for now.